What's up, you money makers and Hcmc army? Welcome back to the channel. We have not seen so much price action into Hcmc. However, I'm going to talk precisely about the numbers today. Why there are some concerns into the market, into the stock market, especially from the investors, as you can imagine, and what Hcmc is doing and what they can do to make sure that we are more and more profitable. Because given that the revenue of 6.1 million in 2022 quarter ending Q2 on June 30th, we are seeing, regardless of the $6.1 million in revenue, we are seeing loss from the operation, which is 1.3 million compared to $3.3 million in revenue for the same period last year in 2021 and $685,000, which was negative net cash income. So let's talk about what is going on, because Hcmc is barcoding between 1 and 2 level. Let's get real, because this has been going for a long period of time. It's 0.0001 and 0.0002. However, I'm happy to see that we have seen more and more trades towards the 2 level and not towards the 1 level. However, if you take a look right here, that's all 2 level, went to 1.5, went back up 2, went to 1.5, so on and so forth. If you think about what's the volume looking like, the volume is pretty low, 117 million in the last trading session. Now, what is volume? Volume is number of shares that are transacted during that particular trading session. So Friday, the transaction was 117 million shares, 308 million on September 15th, which was Thursday, 100 million, 192 million, 290 million. So all in all, what I'm trying to say is we did not really see more volume, which is one of the concern. However, I just wanted to pull up my calculator and to show you what Hcmc is doing in terms of cost of sell. You want to focus on cost of sell. Now, there are certain reasons as to why the numbers the way it is, and I will explain that in more detail. But let's take a look. Cost of sell for 2022 3 months ended June 30th, we have seen cost of sell 3.8 million compared to the total net sell of 6.1 million. So what I'm going to do is 3.8 million, you divide that by 6.1 million and you multiply that by 100, which means they are spending 62.29% of the total revenue into the cost of sell, which is pretty high in my honest opinion. If you think about 2021, they spent 1.9 million. So 1.9 divided by 3.3, which is right here, 3.3, and you multiply this by 100, which means in 2021 in Q2, they spent 57.57%. So 57% of the money that they spend here as cost of sell. Now, right now, they spend almost 62%. Once again, 3.8 divided by 6.1, multiply that by 100. So they spend 62% right here in the cost of sell, which is high. Now, why they're spending a lot more? There are a couple of reasons. Number one, there is inflation, which is killing some small companies like Hcmc. So the impact of the inflation is real. If you think about the gross profit right now, 2.3 million, which is right here, versus the $6.1 million of total sale, which means the gross profit is 37.70%, which is pretty low because it is going to add up with the total operating cost. Now, total operating cost right now is also high in my opinion. So 3.6 million divided by 6.1 million, which is 60% that they are spending. So 3.6 divided by 6.1, they're spending almost 60%, 59.01% total operating into total operating expense. For a business of this size, this is really high, which is why they are not profitable. If you think about last year, what they did, 2.1 divided by 3.3, 2.1 divided by 3.3, which is 63%. So they did not really improve a ton more. They hardly improve a couple of percent here or there, but their challenge is, once again, operating expense, because as you can imagine, the total cost of sale is not really can be controlled 100% by Hcmc. Yes, if you bulk order, you save money on the total cost of sales. However, it is not super controllable. But what HCMC can control, what is within their control is total operating expense, and which is what we should be seeing that HCMC should focus on. Now they are focusing a ton more on EBITDA. Does this change the game? Probably not, because they are not really optimizing the total operating expense, which is one of the concern that I wanted to bring up. Remember, I'm a pro HCMC. I love HCMC as a company. I do see there is a huge potential for HCMC, and they have a record sale, 81.1% year-over-year growth with $6.1 million in sales for the second quarter. Their gross margin went up to $2.3 million, which we saw. However, it is not impactful unless and until HCMC works on their total operating expense, which is pretty high, which is putting them into the net cash income, which is loss of $1.345 million compared to the profit that they made from operation, $179,000. So $179,000, yes. So you want to really focus on to that. Now their EBITDA for 2022, $1.1 million, which is pretty high in my opinion, which was $527,000. So little over $500,000 last year. And I get it why it was low, because their total revenue was low. Now when the revenue goes high, which means they have to support more and more in terms of the sales and the profitability, which is actually bringing their profitability down, which is what I wanted to really quickly call out, because HCMC will need to do something. So if their revenue skyrockets, their EBITDA or their operating expense does not really skyrocket. Now what they're doing to address that, their business strategy is they want to attempt and expand and monetize upon the patent suite. Now it is not going to help HCMC into the nearer term, because this is more of a long term strategy, as you can imagine. So HCMC, what they have done is they have divided themselves into 4 different business segments, business unit. HCMC Intellectual Property Holdings LLC is someone who is managing their portfolio for their patent suite, as you can imagine. The number 2 is the operate and potentially expand upon 6 health and food vitamin stores. So which is what they're doing pretty consistently. They want to expand, they want to make sure. But remember, this number 2 comes with the operating expense, because every single location that they open, they'll have to pay the rent, they'll have to pay the HR, which means the human resources, whoever is going to work there, who is going to be the admin assistant, so on and so forth. Third thing that they will need to do is the cost of good, because they're opening up food and vitamin store, more and more locations. They will have to manage, they will have to make sure that they adhere to whatever their landlord needs, so on and so forth. So remember, they'll have to also spend more and more money into marketing and making sure that they're in the business that people know. The third thing that they want to do is they want to improve or expand upon their Healthy Choice Wellness Management Center. Now this is something that they can do to reduce their operational expense, because often they do the licensing deal. Now when you have a licensing deal, that means you are collecting just the royalty based on what you have offered. I'm not 100% sure, but HCMC has been doing a ton more deals in terms of the wellness center, and you can take a look into their site, and you can see that they announced the exclusive provider contract with the Elevated Living. They also had this salon and cash spa in Fort Lauderdale, Florida. They also had the organic and natural health food vitamin chain in the upstate New York. They are doing also Healthy Choices Wellness Center licensing agreement as well. So they are focusing on expanding the business, but we will see if they are able to really reduce the operational expense, especially the EBITDA, which is when it will put them, once again, this number should have been into the positive territory. So if this is right now, it's negative 1.1 million, which is adjusted EBITDA, and that puts them their net income into the loss from continuing the operation, which is 1.3 million negative for the quarter 2 in June 30th, 2022. Now, does this really a problem for HCMC? Probably not, because they have a ton of money on hand. They're working on pretty big deals in terms of the institutional investors. that they're looking into. Right now, they have $19.3 million in cash, which was at the end of 2021, $26.4 million. So we passed 6 months and they burned $6 million, give or take. They also did some of these deals where they are spending more money, but that's given, but they are spending between $1 and $1.5 million every single month. The total current asset is $22 million. So the company is not looking for money in the interim, in the real near term, but that is burning, or that is hammering their business, and that is hammering their cash on hand at the moment. And the last one is they're also looking for new attractive business lines with the mission of healthier choices to add into their portfolio, which is I really like, because that can change the game in terms of how they can expand, how they can lower down their EBITDA, how they can lower down their operational expense, so on and so forth. What Hcmc has been doing so far is, take a look, they want to add value, and 4-point plan that they have shared to increase the shareholder value. Each of this is super impactful. Number one, they want to buy back common stock. Now, there are some misconceptions. If you take a look on the stock tweets, there are 84,482 people that are watching Hcmc pretty closely. Take a look from one of the user who wrote right here, which is a little bit of a misconception. Hcmc, 5 million shares is a joke compared to total operating or total authorized shares. Now, why they are saying is because let me just refresh and show you. 5 million shares is a joke compared to total OS. OS is outstanding shares. Now, you know that Hcmc has a huge number of outstanding share. Now, what they're talking about is, I'm shocked more people are upset at this, and the people who see this as a positive and invested emotionally. So daily volume is a joke. Yes, I agree. They're also talking about reverse split. It is going to hit hard. But take a look what Hcmc is saying if you pay close attention. It is not 5 million shares. What they're trying to say in terms of buyback is $5 million worth of Hcmc stock. It's not 5 million shares. It's not 5 million just Hcmc shares at the value of 0.0001. It's rather spending $5 million in buyback. Now, if you think about what Hcmc is doing, market cap is 50.96 million. Compared to that 5 million, they're talking about, give or take, 10% of their total market cap that they want to buy back, which is a pretty significant number. Yes, it's not a huge number. It may not change the game up to an extreme level, but it is going to definitely help shareholders into the positive direction. Before I go ahead, I just wanted to ask you if you can hit the like button. We need 250 likes on this video, so don't forget to hit the like button, subscribe to the channel so you don't miss out on very important and juicy updates. Also, I just wanted to say that this is not a financial advice. I'm just doing my research and analysis, and I like to share this information with you, so take it with a grain of salt. They are also looking for spin-off into Hcmc's assets in newly public traded company, which is new company. You think about that name until the name is announced. The third one is the Hcmc stock has a dividend that they're going to offer to Hcmc shareholder. And last but not the least, equity capital raises from the institutional investor to strengthen the fund and both Hcmc and new company moving forward. Now, in my opinion, this is going to add a lot more fuel. Now, number one, I wanted to call out that $5 million, it is representing 27% when the Hcmc wrote this article. And probably they're talking when it was not at the 2 level, but rather at the 1 level, 0.0001. Right now, the stock is trading at 0.0002, which is right here. But if you divide that by 1, because it goes to 1 and goes to 2, goes to 1, goes back to 2. And we have been seeing this barcoding forever, which is concerning to many shareholders. But remember, this could be a big game. And again, if you're riding for free, if you're someone like me, you don't really have to worry about. But Hcmc's current capital reserves and approximately half of the amount that is invested in non-institutional investor and shareholder during the rights offering, as you already know, 0.0010. However, this buyback is going to help out. However, the reverse split may or may not help out. That will talk, and that's for another video. The spin-off that they want to also come up with a new public company being formed with the intention of launching on NYSE in the fourth quarter of 2022. How can this happen? Probably they are looking at one of the shell company, do the reverse merger, and then get listed on NYSE. Why that is so important? Number one, it gets a lot more avenues for shareholders to invest in HCMC. There are a lot more eyeballs within looking at HCMC, which is going to only help HCMC as a stock price, regardless of the revenue or anything else, because we have seen that they boosted the revenue, but we did not really see any momentum into the stock price. The next one that they're trying to do is the stock dividend. You really want to remember that stock dividend is free money, and they're talking about in more detail here. I'll share the details when we get closer to that. And the last one, which is most exciting to me, is HCMC will no longer have the same level of assets and income currently enjoys from the retail shareholders here and there. But what we want to consider is that they have contractual investment commitment for $13.25 million that have been made to those with the same institutional investors that they're working on, that they're invested already in its MC, and they're offering Series E preferred stock. Now, why this is important? When you have investors, especially the financial institutions, they'll keep HCMC straight. They will push HCMC to make sure that they're heading into the right direction. Unlike retail shareholders, they will have a lot more say, they will have a lot more levers to pull and make sure that HCMC is heading into the right direction, which means raising equity from institutional investors is going to be beneficial at the end to the retail shareholders, because they'll be super focused on how they can increase the value of their investment. How can they increase the value of their investment? They can raise the stock price. If the stock price goes higher, that means they can sell their stake at a higher price than they invested. Can they double, triple, quadruple their money? Of course, because HCMC is at a pretty low level of 0.0001. Can it go to 0.0010? There is a big difference between institutional investors and retail investors like me and you. Why? Because they really know where this can go. Can it go 10x? Probably yes, and which is why probably they're investing the money. And you want to remember where the smart money goes. With that, all I'm trying to say is hit the like button, subscribe to the channel, don't miss out on that, so we can share this information with more and more people. This is only for the entertainment purposes. I'm just sharing my views, thoughts, ideas, research, and analysis. Thanks for watching. I'll see you in the next video.